Hello traders, welcome to the channel again. André Cardoso here. Thank you for being here as always. For today I have a special for the Japanese yen pairs, for the Forex pairs of course, and let's start with the dollar versus the yen. Some of these charts I already shared them yesterday on my previous video, so I'm just reinforcing some of these technical analyses for some of these pairs. So and updating some of these price reactions that we had these first days of the week. So I think we are inside of what we may call a descending wedge. I believe the market will trade in the direction of the previous swing before the formation of the wedge, so which implies a violation of the support level. And if that happens, I will pay attention to this Fibonacci, golden Fibonacci level 142.85 in particular, because it's a default target for the bearish bat pattern. So this bearish bat pattern completed at the 88.6% Fibonacci retracement level, and since the pattern has, we have a nice reaction to the downside. We are now threatening the trend line support of this momentum to the upside. So I believe that a violation of this structure should imply a move to the downside, a significant move to the downside, and I'm pointing to 142.48. So this is the 38% Fibonacci retracement level, as I said, the default target for that bearish bat pattern. So let's move forward to the euro versus the Japanese yen. We are in a range between the most recent support 158.71. We have resistance at 159.72. So I have a pattern projected at 156.83, which implies a move to the downside below the support level, and I will pay attention to this price zone. So we have a kind of a convergence or a cluster box, let's call it a cluster box, between the 78.6 and the 113% Fibonacci extension of the last swing high. So this last swing, the one that gives sequence to a breakout of these highs, and the one that forms the weekly fractal resistance. So an extension below this previous fractal support that points to 156.83. This is the 113% Fibonacci extension level. I want to see how the price will react from this price zone for the euro versus the Japanese yen. The Aussie, we can go into a lower time frame. The Australian dollar, we have a technical double top, and we have a broken neck line. As we can see, we are also approaching potential trend line support. Actually, we are now threatening this support trend line. It's possible to find some pressure there. I have also another pattern that I want to pay attention to, 95.77. So this is the golden Fibonacci extension of the last swing high. So this last swing printing the most recent daily fractal resistance, and actually the one that prints at the technical double top. And that being said, so I will pay attention to move towards this golden Fibonacci level 95.77, and I will expect a bounce from this price zone, eventually a retest of this daily fractal support. In fact, we can measure the potential of that move, which points to the 38% Fibonacci retracement level. And as we can see, that Fibonacci retracement points to the previous support. Actually, there's a perfect convergence between that potential move. If the price completes the pattern, we will expect a move towards the 38% Fibonacci retracement level. The pound versus the yen moving forward, the same I will expect, the same pattern I will expect to be formed, not above this previous support level. So I need to see how the price will react below this fractal support. So I need to wait for that to happen. 183.91. So this is actually the previous weekly fractal resistance from I believe from October, and that may offer some pressure for the pairs. I will expect that pattern to form at 183.91. The New Zealand versus the Japanese yen is now threatening the previous support and previous weekly fractal resistance. In fact, as I said yesterday on my previous video, we were facing what we may call a 3 drives pattern formation. I was expecting a violation of these lows in 90.43. We are now trading below this previous fractal support, and we are moving below that fractal. So I will expect 89.77 to offer some pressure, some support for the pair, and we will expect a reaction to the upside, an attempt to recover the most recent losses if that happens. So the same expectation will start to emerge if the pattern completes 38% Fibonacci retracement, 50% Fibonacci retracement. Those are the default target zones, basically the 50% Fibonacci level for the bullish shark pattern projected at 89.77. So, and to finish for today, the Canadian dollar versus the Japanese yen, also threatening support levels at 108.06. This is the daily fractal support. I believe that a clear breakout of this or a clear violation of this support should trigger a move to the downside. We are talking about probably 80 points, I'm not sure, 80, 60 points, 90 actually 83 points towards the previous support, and a few more if you target the pattern completion point, 119 points. So that's the 113% Fibonacci extension level. Actually, we have convergence of multiple patterns that may start to emerge if the price breaks below the weekly fractal support. And that's all for today. I hope you enjoy it, and I hope to see you in the next video. Stay well.